This GTV chart on the Bloomberg already showing how the Citi Eco Surprise Index has turned negative. So why do you like Japan in this environment?
Well, actually, if we look at earnings revisions, corporate Japan is doing very well. I mean, in the second quarter, the second best earnings revisions after the US, whereas emerging markets, and in particular China within emerging markets, are lagging very badly. So, yes, we are worried at the global level about economic surprise turning down. But so far, Japanese corporate earnings is very resilient in that environment.
You mentioned China. Is that the main factor that you're not liking emerging markets as much? Because we have seen vaccinations, for example, starting to catch up in some of these EMs.
Yes, I think if you look at EM, it is China that has underperformed this year. In fact, this year is headed to be the worst year for China's performance versus EMX China since 2002. And that's really due to this cocktail of issues that we've been talking about all year, which is credit tightening and tight liquidity conditions and regulatory reset and what that means for corporate margins and earnings. And both of those factors, in our view, are still ongoing for China. There are some other parts of EM that we are worried about, in particular the broad semiconductor tech hardware cycle. But the essence of the problem in EM's performance this year has been and remains China. A market like India, for example, has done extremely well.
When it comes to some of these Southeast Asia countries that have struggled with the emergence of Delta, you're saying that it's too early to be contrarian positive just yet. What would you need to see to be able to change that view?
Yeah, so we've clearly seen, sad to say, that with Delta variant COVID, we've been in these cycles of lockdowns, partial reopenings, even interruptions of manufacturing production, for example, in Malaysia. And so that's really brought GDP growth levels right down. And to get a sustained consumer service economy recovery, yes, we need those much higher vaccination rates. And we need Asia as a whole to start to open up in relation to, for example, tourism, which is a very important feature for economies like Thailand and Malaysia in Southeast Asia.
Is a taper tantrum still something to worry about when a lot of these EMs have, in the interim gotten their houses in order, if you will?
Well, I think if you look at taper tantrum, it matters only in as much as it may sort of strengthen the dollar if we do get a tantrum like we did in 2013. Now, again, if you look at somewhere like India, as you say, the external position of India and the fiscal position is much better than in 2013. So India has been a key overweight for us and should be resilient even if the dollar is moderately strong. So, yes, to that extent, some parts of EM are in a better position. But this overarching problem that we have coming out of China, that China's own demand, remember, China is a big source of demand for other EM. You were just touching earlier on in your show about the iron ore price and how that affects, Australia is not an EM, but it affects EM like South Africa, that's an iron ore exporter too. You just can't get away from this rather difficult confluence of circumstances we have. Whereas in Japan, we have the catalyst of an LDP leadership change. We've got likely a Diet lower house election. We've got a yen that is broadly range-bound, if not somewhat soft. And we have corporates that are really delivering on what we've called their productivity and innovation resurgence. So they're gaining share, the big Japanese manufacturing corporates, in many of the areas in which they operate. So we do strongly prefer Japan to EM.
And yet, in your notes, you say that South Africa and Russia, though, are standouts. Why?
Well, South Africa has that iron ore sensitivity, but it has other parts of the commodities complex that are relatively resilient, and it's somewhat cheap. I think for Russia, it's having an extremely strong year for performance. It's one of our other overweights. We're actually neutral, South Africa. But Russia is being buoyed up in particular by the strength in natural gas prices, which are at record highs in Europe. And again, this is an extraordinary year for performance relative within EM. Russia is heading for its best ever year of performance relative to China. And that's, who would have thought that necessarily at the start of the year?
When it comes to this week, of course, many central bank decisions around the world, and we'll be very much focused on what happens with the FOMC. Which parts of EM should we be paying attention to if we hear more plans about the taper?
I think it would be the ones that traditionally have higher sovereign risk characteristics in Latin America, parts of EMEA, Southeast Asia, like, for example, Indonesia or Turkey or Brazil. And so, again, that's the part of the asset class that tends to be most vulnerable when we do get upward pressure on US real yields and a somewhat stronger US dollar. And at the moment, our house view is that the 10-year yield does back up somewhere towards 1.8% by the end of the year, and that real yields, which the 10-year maturity are minus 100 basis points right now, that they narrow. So that external environment is going to get more difficult for some of the weaker sovereigns in emerging markets.